Hi everyone, it's Femi Olaniyan here and welcome to another video. In this video, I'll be talking about crypto trading versus forex trading. I'll talk about the key differences between these two types of financial markets, from asset type to market hours and volatility to regulation, liquidity, and more. I will also provide you with the insights to help you understand how these financial markets operate. So whether you're an experienced trader or you're just getting started, this video will give you the necessary knowledge to understand these two financial markets. So let's get started. Now let's start by defining these two financial markets. Now, what is crypto trading? Crypto trading is the practice of buying, selling, and exchanging cryptocurrencies through crypto exchange platforms, and profits are made by speculating on crypto price movement through market analysis. Now, cryptocurrencies are digital or virtual currencies that use cryptography for security. Unlike traditional currencies, cryptocurrencies are decentralized and typically operate on technology called blockchain. Now, some of the most traded cryptocurrencies include Bitcoin and Ethereum. Now, what is Forex trading? Forex trading, which is also known as foreign exchange trading, involves the buying and selling of currencies. Profits are made by speculating on price movement of different currency pairs through market analysis. Now, the Forex market is the largest and most liquid financial market in the world, with traders including large banks, central banks, institutional investors, currency speculators, corporations, governments, and other financial institutions, and even retail investors. Now, the most common traded currency pairs include EUR/USD, which is the Euro/US dollar, the USD/JPY, which is the US dollar/Japanese yen, and the GBP/USD, which is the British pound and US dollar pair. Now, what are the main differences between crypto trading and forex trading? Now, let's start with asset type. Now, crypto trading involves the buying and selling of digital currencies or assets, which are called cryptocurrencies. Now, these digital assets are decentralized and use cryptography for security. So for crypto trading, you are basically trading cryptocurrencies. While on the other hand, forex trading involves the exchange of traditional fiat currencies or foreign currencies. These are currencies that are established as money by government regulation or law. So that's the first difference. The second one is about market hours. Now, the cryptocurrency market operates 24/7, meaning that transactions can be carried out at any time of the day or night. Now, this is because the market doesn't rely on any traditional banking hours. While for forex trading, it is limited to 24 hours a day and 5 days a week, as it largely depends on the functioning hours of the traditional banking system. The next difference is about volatility. Now, cryptocurrencies are known for their high volatility. Prices can skyrocket in a matter of hours or days, leading to high potential returns but also high risk. Now, on the other hand, most currencies traded in the forex market have relatively stable prices with minor fluctuations in value. Now, next I'll talk about regulation. Now, for forex trading, it is highly regulated by government institutions to protect investors from fraudulent activities. Now, these regulations ensure transparency and fairness in the market. Meanwhile, crypto trading is still largely unregulated. This lack of regulation can lead to greater risk, but also greater potential for profit. Now, the next difference is about liquidity. Now, for forex market, it is known for high liquidity due to the vast trading volume they handle every day. Now, this means transactions can be executed quickly and smoothly. For crypto markets, however, it tends to be less liquid due to their smaller size, which can lead to lower transaction times and higher volatility. The next difference is the market age. Now, the forex market has been around for decades, making it a well-established and traditional form of investment. But the cryptocurrency market, on the other hand, is relatively new, having only emerged in the last decade. So this means that it can be a less understood and more unpredictable market. The next difference is about risk. Now, both markets have their risk and they are both high-risk markets. So if you plan to go into any of these two financial markets, you need to know that you are going into something that is very risky. However, crypto trading comes with a higher degree of risk than forex trading because of some of the differences I've explained earlier. Now, the next one is the influencing factor. Now, forex markets are influenced by a range of factors, including government policies, economic indicators, and geopolitical events. Now, this can affect the supply and demand for different currencies, and as a result, it can affect their value. Now, cryptocurrencies, meanwhile, can be influenced by technological changes, market sentiment, and regulatory news. The value of a cryptocurrency can also be affected by the actions of its community of users, the developers, and even the investors. The next difference is the trading type. Now for crypto trading, it allows you to do both spot trading and futures or derivatives trading. Spot trading means you are buying a cryptocurrency to invest in, while futures or derivatives trading means you are trading futures contracts to make money. Now in case you want to learn more about the differences between spot trading and futures trading, I have a video on that. I'll put the link to that video in the description below. Now for forex trading, it's just like futures trading in crypto. Now the next difference is leverage or lot size. Now for crypto trading, you have what is called leverage. Now whenever you want to take a futures trade, you'll be required to select your leverage, which can range from 1x leverage to 125x leverage depending on the crypto you are trading. But for forex trading, you have what is called lot size. Now this lot size also varies. You can have 1 lot size, you can have 0.1 lot size, you can have 0.001 lot size, and so on. So if you want to learn how to use leverage in crypto trading to make more profit for yourself, I also have a video on that. I'll put the link to that video in the description below. So these are the differences between crypto trading and forex trading. Now, which one is fit for you? Now, deciding whether to engage in crypto trading or forex trading depends largely on your personal circumstances and your risk tolerance. Now, here are some things to consider. First, you have to consider your risk tolerance. Now, crypto trading is generally more volatile and risky than forex trading. So if you are comfortable with high risk and the potential for high returns, then crypto trading may be fit for you. But if you prefer more stability and less risk, then you may stick with forex trading. The next thing you need to consider is availability. Now, crypto markets operate 24/7 like I said earlier, which may be advantageous if you have other commitments during traditional market hours. Now, forex market on the other hand operate 24 hours a day, 5 days a week. So depending on how available you are, you might decide to go for crypto trading or forex trading. Now, the next thing you need to consider is interest in technology. Now, if you're interested in blockchain technology and the future of digital currencies, you may find crypto trading more appealing and more interesting. Now, this was actually the first thing that moved my interest in crypto. Now, in 2017, when I discovered crypto, I never had the intention of trading crypto. I just wanted to understand how digital currencies worked and the mystery behind them. And the more I was learning, the more interest I was also having. So again, if you have interest in digital currencies, crypto trading might be a better option. Now, on the other hand, if you are more interested in traditional financial markets, then forex trading is the best. Another thing you need to consider is the regulation. Now, like I said earlier, forex markets are heavily regulated, which provides some level of protection to the investors or the traders, while crypto markets are less regulated, which could mean more opportunity but also more risk. Now, as you know, some countries are against cryptocurrencies, so you also need to think about that. Now, remember that no matter which market you choose, it's important to educate yourself and understand the market before you start trading. So if you have any questions, type them in the comment section below, and I would like to know what's your opinion about crypto trading and forex trading. Let me know which one you prefer in the comment section below. And if you want to register for my complete crypto trading course for beginners, the link to register is in the description below, or you check the pinned comment. Thanks for watching. I'll see you in another video. Bye.